You guys might be aware of Luna. You might be aware of UST, which is probably not helping out the entire crypto market. Huge dumps as they try to basically fill their reserves with Bitcoin. They got rid of Luna as the reserve currency for UST, which is supposed to use an algorithm to go ahead and adjust it. Here's one thing. Anytime a tech company tells you to trust the algorithm, I'd question it. And that includes anything within crypto, right? Why is that? Well, we have a track record. Trust the algorithm for social media. That worked out real well. So you want me to trust your algorithm for a stable coin? No, thanks. Now, I wasn't ever like personally invested into Luna. The first time it hit my radar was when Flux added it to their parallel assets. And obviously, as a miner, that's the biggest thing that we have to focus on, because it's definitely affecting Flux pretty heftily. As far as proof of work coins, I think Flux has taken the biggest hit. Now, there are some tinfoil hats, so I'm not going to report this as fact. In fact, people are, I will say, upset that Charles Hoskinson from Cardano, by the way, in case you're not aware of him, shared this irresponsibly. But I think that it's a fun tinfoil hat, and I think that you should be aware of it to a certain extent, right? So by tinfoil hat, I mean that I don't have any proof that any of this is true or that any of this is accurate, but this is what's getting shared around, and it is what the quote word on the street is surrounding Luna, according to, of course, Charles Hoskinson. It says that BlackRock and Citadel borrowed 100K Bitcoin from Gemini. It appears in their loan book. They swapped 25K of that Bitcoin into UST. This was all done quietly in anticipation of the attack. When the time was right, they called up Kwon at Terra Foundation and said they wanted to sell a lot of Bitcoin for UST. As it was a large trade, they told him they didn't want to move the market and asked if he would like to buy their large block of Bitcoin at a discount for UST. Kwon took the bait. He gave them a huge chunk of UST, thus lowering the UST liquidity significantly. At that point, BlackRock Citadel dumped all of the Bitcoin and UST, causing massive slippage and triggering a cascade of forced selling in both assets. The real problem was BlackRock Citadel knew that Anchor, which holds a lot of Luna, was a Ponzi scheme. They offered 20% staking APY for, X sake. And this crash would trigger more withdrawals than Anchor can repay. These forced withdrawals and selling would trigger a massive sell-off in Luna, thus further breaking the $1 peg and wrecking the market further. BlackRock and Citadel now buy the Bitcoin back cheaply to repay the loan and pocket the difference. Meanwhile, billions of longs in Bitcoin VAR were wiped out. This was pure market manipulation. So obviously pretty hefty accusations thrown at BlackRock and Citadel, as well as at Kwon, which is kind of the leader of Terra. And like I said, I can't necessarily prove anything other than obviously you have the loan book that you can take a look at and the swap of Bitcoin into UST. Those are two things that you can verify on the chain. So that did happen. The rest of it, what was happening behind the scenes, what the intentions were, that could be interpreted across the board differently. So I just want to make sure that everything's taken with a grain of salt, especially as this is a developing story. We have more surrounding it because basically now more is coming out about Kwon, the Ex-Terra, and some Ex-Terra colleagues are saying that essentially he had worked on another failed stablecoin. This is why you need to do your research whenever you're looking into these projects. See who the founders are, see who the developers are, see what past projects they've worked on, and so on. Unfortunately, what happens is none of this gets reported in the large media until after, after problems arise. What would be preferred is that you make these correlations and do the research beforehand, and that will be on you. It's not necessarily a failure of the publications. I do wish there was more reporting surrounding this type of stuff, because I don't necessarily cover these types of topics either, because we're proof of work focused. But UST's Kwon was behind earlier failed stablecoin. Ex-Terra colleagues say Basis Cash, an algorithmic stablecoin project founded by the anonymous Rick and Morty in 2020, was actually the work of Terraform Labs employees. Kwon, the CEO of Terra creator Terraform Labs, was once of the pseudonymous co-founders behind the failed algorithmic stablecoin Basis Cash, CoinDesk has learned. Basis Cash was a closely watched revival in decentralized finance circles when it launched on Ethereum in late 2020, just before the launch of Terra USD, which is UST, Terra's flagship stablecoin. Like UST, BAC sought to maintain a $1 peg through code, not through collateral. But it failed. The token of this long-abandoned project never achieved its target of dollar parity. Sank below $1 in early 2021 and was trading well below 1 cent on Wednesday. Now history appears to be repeating. Over the last 3 days, UST sank precipitously below its peg, going as low as 27 cents in the early morning U.S. hours of Wednesday. UST's depegging has shocked crypto markets and regulators alike, as the once $15 billion stablecoin has continued its downward spiral. While BAC's $54.5 million footprint was far smaller in impact, it offers a historical data point for observers grappling with the feasibility of algorithmic stablecoins. Hyunsuk Kang, a former engineer at Terraform Labs, said Basis Cash was, in fact, a side project from some of Terra's early creators, including himself and Kwon. Kang ultimately left TFL to build a Terra competitor called Standard Protocol. Quote, Basis Cash wasn't tested at the moment, and we weren't even sure it would work, Kang said. Kwon wanted to just test it out. He said that this was a pilot project after doing that. Another Basis Cash builder who spoke to CoinDesk on condition of anonymity confirmed that Kwon and TFL employees were behind the project. Both Kang and the anonymous employee tell CoinDesk Kwon was Rick Sanchez, the pseudonymous co-founder. CoinDesk also reviewed internal Basis Cash Korea, BCK, chat logs in which Kwon alludes to himself as Rick. Kwon did not respond to CoinDesk's request for comment. Basis Cash never reached the heights of other Kwon-linked crypto projects. Its total value, locked TVL, for short, briefly peaked at $174 million in February 2021, 2 orders of magnitude below Terra's $30 billion TVL before this week's historic sell-off. Revealing the real name behind the online pseudonym, even a long discarded one, is not a decision CoinDesk takes lightly. Our default position is to respect the privacy of pseudonymous actors with established reputations under their well-known handles, unless there is an overwhelming public interest in revealing the real-world identities, because you can get clicks, right? In this case, there is such a public interest as Kwon's UST stablecoin death spirals, wreaking havoc across the broader cryptocurrency market. Amid this precarious situation, investors deserve to know that UST was not Kwon's sole attempt at making an algorithmic stablecoin. Basis Cash and its promise of an algorithmic stablecoin predated Crypto Rick and Morty. An anonymous team of builders, mostly employees from Terraform Labs, according to chat logs reviewed by CoinDesk, modeled Basis Cash after an earlier project called Basis, formerly known as Basecoin. Basis, an erstwhile venture capital darling, raised $133 million before shutting its doors in 2018 over regulatory concerns. Founder Nader Al-Nahi said that there would be no way for Basis peg maintenance tokens to avoid security securities designations. He shuttered the project rather than fight it out in court. But Basis's algorithmic ideals continued to float around stablecoin circles right on through to the heat of DeFi summer 2020 when Rick and Morty stepped in. Kwon and the other algorithmic stable adherents have long argued that the decentralized finance space needs a decentralized stable currency without censorship risk or central points of failure. Such an approach contrasts with that of market-leading stablecoins like Tether USDT and Circle's USDC, which maintain their $1 peg by, in theory, backing every digital dollar with their centralized treasuries. Quote, yo, D-Gens, anyone remember what Basis was? It was one of the early DeFi algorithmic stablecoins with high ambitions, but it was just shut down due to SEC-related risks, end quote, said Rick's since-deleted Telegram account in the Basis Cash Telegram channel on August 20th, 2020. Today, we're bringing Basis back from the grave. Does anybody else find it funny that they call it like base, but like if you want to be based in reality, you probably want to have the dollar peg based on the dollar and have it backed by the dollar? I don't know. I find it extremely ironic. Apparently intrigued by the early ideas behind Basis, Do Kwon directed a select group of TFL employees to resurrect what eventually became Basis Cash. Kang and other early TFL engineers say. The Korea-based project was envisioned as a way to test out the core concepts of the original Basis without falling prey to U.S. regulatory pitfalls. CoinDesk sources say Kwon deliberately distanced himself from the day-to-day operations of the project, though he proposed most of the core ideas behind Basis Cash and its underlying token model. Analogous to UST, which relies on a token burn mechanic involving its sister coin Luna, BAC relies on a bonding mechanism to maintain its $1 peg. Kwon also appeared to serve as a spokesperson for the project on Twitter and other forums under his Rick pseudonym. On its website, Basis Cash describes itself as a, quote, decentralized stablecoin with an algorithmic central bank, end quote. And in November 2020 interview with CoinDesk, Rick shared a vision for Basis Cash similar to that for UST. In the long term, we look forward to seeing Basis Cash be used widely as a base layer primitive such that there is an organic demand for the asset in many DeFi and commercial settings, he said over Telegram at the time. What are the lessons? One of the first examples of an algorithmic stablecoin to be tested in the wild, Basis Cash never found its footing. Game theory and smart contracts were supposed to regulate BAC's supply to keep it trading at the price of $1, but the token never managed to hold on to its dollar peg. Even amid Basis Cash's struggles, Kwon's main account could be spotted from time to time in the project's Telegram sans pseudonym. A user surprised to find Terra's founder in the Basis Cash Telegram group once asked Kwon what he was doing there. Quote, I like studying new things, especially old things that are new again, end quote, he responded. So you do have basically the problem of in cryptocurrency, you know, pseudonyms and anonymity, all that surrounding this. So maybe it's really, really difficult to do your own research surrounding it as far as the actual developers themselves. But what you could see here, if you research algorithmic stable coins, is like, well, maybe it's not a great idea because it's failed so many times. I'll leave that up to you guys. I'd also like to hear your opinions on algorithmic stable coins. Like I said, that kind of terminology is off-putting to me personally. We do have to talk about Ergo and SigUSD, who basically Charles Hoskinson was tweeting about today as well. So I do want to follow kind of this up probably tomorrow at some point, taking a look at the proof of work related stablecoin that is similar with SigUSD and how that functions and what sets it apart from this and so on, blah, 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 and kind of go from there. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here Or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.